Well, hi guys, welcome to this Money Control live stream. A brand new week and the GIFT Nifty hinting at a dash at an all-time high for our market. Looks like we are poised for a positive start after 1% gain last week. And of course, global cues also hinting at positive start and, lots of stocks in focus, including the likes of Sula. We have Paytm, of course, continues to be in focus. Some new additions to the FTSE indices as well. So we'll be watching out for those stocks. And of course, all your stock related queries, keep them coming in on our YouTube feed and we'll try and take them up with a technical expert on the show. But, before we move any further, let's take a look at the top headlines at this hour. Wall Street halts a 5-week winning streak as Dow slips after a hotter than expected producer price index report. Investors fear that rate cuts will be delayed to the second half of the current year. In fact, treasury yields have also spiked to highest levels since December. Asian markets opened mixed on a weak handover from Wall Street. Shanghai reopens after Lunar New Year holidays. The GIFT Nifty, as I mentioned, indicating at a dash at a fresh high for the Indian market. Crude prices gain as geopolitical concerns overshadow a weak global demand outlook and hot inflation print in the US. Brent trades above that $83 a barrel mark. Paytm discloses to exchanges that 197 Communications has shifted its nodal account to Axis Bank to continue merchant settlements. This even as the RBI has allowed the bank 15 more days before curbs on its banking operations kick in. Among other stocks in focus, watch out for Sula as sources suggest that Belgian investor Verlin West will exit stake via block deal. And Motilal Oswal will also be in focus as, ransomware group Logbit has claimed that, it has made cyber attacks on the broker. Well, without any delay then, let me get on board. Our first guest for today joining me is Feroze Azeez, who's the Deputy CEO at Anand Rathi Wealth. Well, great to have you on the show, Feroze. We may be knocking at fresh highs, but, we've seen a lot of volatility kick in, right? And foreign inflows as well have kind of abated. We've seen outflows, to the tune of nearly 30,000 crore rupees on a YTD basis. Here on until elections, do you expect, this volatility to continue even as we see, indices hitting fresh highs?
Good morning, Nandita. Like you said, we are almost knocking on the door of the highest close we've had, which is close to 22,100. So I think if you look at the market, it is not a very highly leveraged market currently. Of course, there are several parameters to be watched out for. If you look at the long positions of the FIIs vis-a-vis their short position in the index futures, it's about 38-40%, which is significantly lower than what it could have been at the peaks. Most often than not, when the markets are at the peak, the FIIs long positions actually inch up to almost 70%. So they're more short than long. That's point one. If you look at the OI of both the futures, which are more liquid, which is this month and the next month, the OIs are reasonably subdued. They're not very leveraged. So if you can get to a peak with huge amount of speculative bets, or you can get to a peak with more cash buying. It's more the latter than the former. That's point one. Point two, I think the earnings have supported phenomenally. We are looking at an 18% growth this year, not just on the Nifty. If you look at the growth on the mid-cap to 150, which is largely the benchmark which mutual funds follow, that's grown about 30% to almost about 757 rupees of earnings this year on an 18,000 rupee price. If you look at the small cap index, which is NSE small cap 250, which is the most commonly used index or the tier 1 index for all mutual funds in the small cap category, that's at about give or take 15,000 rupees in terms of price. In terms of earnings, is about 700. So I think earnings, 14% growth in the small cap, 30% in the mid cap, and 18% on Nifty. These have created some degree of buoyancy, and that's why you see the trough for this financial year is about 17,000 and the peak is 22,100, which is 30% difference from trough to peak. I think that's supported by earnings. Now coming to the very important point which you said, FIIs have had outflows in this calendar year, almost about 30,000 crores, but that's on the back of a 66,000 crore inflow in December after the state election results came out. So I'm not too worried about the outflow in this calendar year because it succeeds a 66,000 or twice more the amount in the previous month.
All right, that's the view on the overall market. Then, but you mentioned the earnings season, right? I mean, we've seen PSU banks, autos outperform and how, right? So, post the earnings season, would you look at sector rotation, perhaps rotating out of private banks into PSU names and, autos as a pocket? What are your thoughts on this sector? Because, we have seen a fair bit of outperformance come in, especially in the two-wheeler pack, right? But would you say that the valuations there are flashing red now?
See, I think auto is generally a sector which has a reasonable correlation to government spending. If you try and see whether government spending is a lead indicator, I think if you look at the kind of government spending which is going to happen, which is going to definitely push up the rural demand, especially the two-wheeler rural demand, because if you look at the 9-month figure on the in terms of the fiscal spending by the government, it's surprising and pleasantly surprising. Of course, only 56% of the fiscal deficit target has been penetrated of the revised one, which was read out in this interim budget, point one. Point two, by this time, in the first 9 months of any financial year, the average expenditure of the fiscal deficit stated for that financial year, 87% happens. So 56 has happened. So I think there is a lot of government spending which is still expected to unravel. So I think auto is trying to capitalize on that, and that's where you see some degree of rally. People betting on huge amount of rural demand, which I think will follow in the next 6 months.
Right, but the point about private banks, right? Of course, there's a lot of concern about HDFC Bank. But last week we've seen some bit of news flow come in when it comes to their home loan, business, right? Home loan growth. In fact, global brokerages are now predicting 50% upside, going forward. Would you say that the weakness that we've seen in HDFC Bank is actually an opportunity because the merger synergies are yet to really play out, right?
Completely agreed, Nandita. See, if you look at HDFC, it's almost about 11-12% weightage on Nifty. That's point one. When two big elephants merge, you will have to give a corporate time to probably make sure that this merger is settled and in terms of shareholder wealth creation happens over long periods of time. Of course, it's not such a simple thing. I think April 22 is when the merger was announced, and that's taken some time. So I would definitely see this as an opportunity because the kind of influx of money which India will see will create the largest stock in the Nifty, a lot of buoyancy. And so this, I would certainly count this as an opportunity rather than an adversity from a shareholder standpoint because of its kind of business model, point one. Point two, I personally think that as a conglomerate of these two businesses, they have a large potential. Of course, to get the whole business together, it should take time, and this is definitely an opportunity.
And about SBI and PSU banks in general, they still have a lot of valuation catch up to do when it comes to private banks, right? So from the PSU banking pack, do you think it's time to stick to the leaders like SBI?
See, I would not be qualified to comment on a specific stock. This was definitely a merger, so I just commented. But I think as a sector, I certainly think PSUs as a sector will have a structural re-rating over the next few years. If you're going to bet on something which is a re-rating, if you look at PEs of 10, 12, 13, I think they're abysmal relative to where the market is. Almost about 170 stocks in NSE 500 are greater than 55 PE now, and about almost 40 stocks are above 100 PE. In that, this is definitely a value pocket. But if you believe that this value pocket is going to unearth itself and create value for you, it's not going to happen in a year, 2 years. But I think in the next 5-year pocket, which is the next government tenure, whoever the government is, if the theme continues, I think there's a structural re-rating in terms of PE is definitely possible for the kind of assets they're sitting on, monetizing those and the kind of infrastructure. Some PSUs have branches in the nooks and corners of this country. I think they, from a financialization standpoint, they're more poised to capitalize. And I don't think India has done the financialization in the last 10 years, especially from an investment standpoint. I think 51% is the total financial assets, and 10 years back, it was 50%. So I think 10 years hence, I think these numbers will change. And I think PSUs are very well poised, not just for the NIM, but also from the fee income standpoint to create huge value for the shareholder.
Right, a couple of more questions, Feroze. I want to get in your thoughts on the entire Paytm issue. Lots of funds were buying into Paytm before the RBI curbs really, came in, right? But here on, what kind of an impact do you envisage especially for the mutual funds who are heavily invested into Paytm?
See, again, not commenting on specific stock from an industry standpoint, I think there is some degree of empathy we stakeholders need to have with a fund manager. If there is a stock of that size, 50,000 crore market cap, it's impossible that 385 active funds don't have exposure. You will surely, whichever stock in India, which will have some kind of speed breakers, mutual funds will surely have an exposure as long as those are not business of 2,000 crore market cap or 4,000 crore market cap. So I'm sure when you look at it from a mutual fund investor standpoint, I think the maximum exposure is about 3-4% in a specific scheme. But the kind of value destruction on the direct equity side for people who've owned it is large, at least momentarily, and I hope it recovers. But I think the lesson to take away for most retail investors is direct equity is something which can create larger dents because the diversification as a concept does not work. Most people buy price, not value, and the stock or the business. So I personally think mutual fund investors have had a very small impact when you look at each pocket getting an impact of 0.5%, 1% of one scheme. People generally have 10 schemes, so it's 0.1, 0.2% on the overall portfolio. Whereas direct equity portfolios, I just analyzed one which lost almost about 20% of the full wealth of the direct equity portfolio which they actually own as a family.
Right, a last question really, Feroze, in the run-up to the general elections, which is that one pocket that investors should be, looking at and, that can generate alpha? What are your thoughts there?
I think when you're looking at general elections, of course, there's going to be a gush of liquidity from FIIs if status quo remains, because FIIs love status quo, and that's what they've exhibited over the last 5 general elections. So I would say anything to do with infrastructure and the peripheral businesses like cement, steel, or anything to do with infrastructure and logistics will have a huge push if the same government were to continue. And that's where the alpha will happen over 2-3 year periods. I'm not speaking about the interim liquidity and the 1 month, 2 month trades. I'm sure that we can speak closer to the general election result.
All right, that's the thought then. But with that, Feroze, I'm afraid we're running out of time. Appreciate your taking out time and joining in this morning and sharing your thoughts. Always a pleasure chatting with you, Feroze. Well, with that, let me bring on board our technical expert for today. Joining me is Rajesh Palviya of Axis Securities. Well, Rajesh, great to have you on the show as usual. Today, looks like we are poised to hit that fresh high of 22,127 or thereabouts, given the kind of setup that we are seeing globally. What are the levels you'll be watching out for on the upside for the Nifty and especially the Bank Nifty today?
Good morning, Nandita. So in the previous week, it was the highest close on a weekly closing basis, and for Nifty, I think the continuation of this uptrend is likely to be there, and yes, possibly we can hit all-time high in the continuation of this uptrend. As in the previous week also, we have seen that, there was a clear long built-up setup in Nifty as well as in the Bank Nifty. So both indices are showing a strength. Nifty is now comfortably holding about to major call concentration area of 21,850. So that level is important support area based on the put concentration. So I think if it's hold those level for next couple of trading session, then possibly Nifty can inch up to the next target of 22,300 in the continuation of this up move. So we are bullish. Buy on dip should be your strategy. 21,850 should be your stop loss to hold your long position. On the Bank Nifty also, 46,200. That's the immediate level where one needs to keep eye. If in today's session, Bank Nifty manages to hold this 46,200, then possibly we can see another round of short covering, and then Bank Nifty can continue furthermore upside towards 46,600 to 800. On the lower side, 46,000 is likely to act as a good support area, as most of the put writers are active at that strike. So that seems to be a good support area in the near-term basis.
All right, those are the levels to watch out for. But let's talk about specific stocks then. PB Fintech, this is one stock that will be in focus, given the fact that, of course, it has been, it has got the license to be a composite broker rather than a direct broker, right? And we have a Citi report this morning which has a buy rating on the stock, target price of 1150. In fact, it says that this move or this regulator nod is expected to benefit PB corporate exponentially, and the fresh business market share will increase multifold going forward. PB Fintech, it has of course done pretty well among the new age firms, but over the last few sessions we've seen some bit of a cool off. off, right? In the last 5 sessions or thereabouts, it's been down somewhere around 4% or thereabouts. But this comes after a very good uptick of somewhere around 28 to 30% on a 6-month basis. But here on 1048 is the 52-week high. Is the setup looking positive on the charts here? Do you think it has the potential to retest these 52-week highs?
Definitely. So, Nandita, stock is moving in upsloping channel on a weekly chart. That clearly suggests that, yes, trend is up, and slowly stock is, moving upward. Series of higher top, higher bottom formation on daily, weekly time frame. Stock is holding about to all its near-term, short-term moving averages. So that clearly shows that, strength is there, sustained buying is taking place, though there was some consolidation since last couple of trading session. But still, we believe that, till the stock is holding above 900, then trend is likely to be on a bullish side. One should use this consolidation to accumulate this stock. On the higher side, once stock crosses above 960, 965 level, then possibly this rally can extend towards 1000 plus kind of level, and we can see again, a stock to regain towards its all-time high trajectory also in a positional basis. So yes, one can buy this stock. Keep your stop loss at 900 in the short term. 965 to 1000 is the immediate target, and then possibly we can see a all-time high trajectory also in the coming weeks going forward.
All right, expect all-time high trajectory on a PB Fintech going forward. But let's talk about some of the FTSE inclusions, right? You have stocks like RVNL, SJVN, Suzlon, Thermax, all of these stocks have been included on the FTSE All World Index. But speaking particularly about an RVNL, after a crazy run of, doubling in 6 months, the stock has, been cooling off. Most of these, analysts I speak to, they say that perhaps, the kind of correction that's coming in could be a good opportunity to accumulate. But, given the fact that, the inclusion will lead to, a lot of inflows, do you think, one should really look at this? Because it has had a crazy run, right? Doubling in the last 6 months. I mean, what would you suggest one should do with an RVNL and other railway stocks?
So after a very strong run, yes, some profit taking is happening. That's the natural process of market. Some cooling off effect has to be there in the stock when we have seen very strong run up, especially in very short period of time. So it's a healthy sign for the stock. Overall structure is bullish across all time frame. Yes, this corrective move has dragged the stock below to 20-day moving average, but still stock is very well holding about to 50-day moving average. So I think till the stock is holding about 225 to 30 zone, there is no as such worry in terms of trend, and trend is very well intact on the bullish side. Yeah, on the higher side, the major supply zone, or you can say like resistance zone, is placed at around 285 to 90 zone. That seems to be watch on a near term to short term basis. If stock crosses about 290 level, then possibly again we can see this stock can continue its all time high trajectory, and we can see further higher level on a positional basis. So at this moment, I think buy and accumulate should be the strategy. Keep your stop loss of 230 to buy this stock on a positional basis. And once stock crosses about 290, then possible target on the high side we can see towards 340 to 350 on a positional basis.
All right, that's the view then on RVNL. But let's talk about Sula. This stock will be in focus. Belgian investor Verlinvest will be looking to sell 8.5% stake and exit the stake rather in the company. And the floor price has been set at 570 rupees per share. That's of course at a discount to current market price. But Sula has also had a good run, but hasn't been in high spirits of late. But if you look at the charts, do you think the setup is still looking positive, and one should in fact look at trading into this one?
So very strong rally in month of January. Stock marked again, all-time high trajectory in month of January. Some cooling off effect is taking place. Now stock slipped below to 20-day moving average. Looking at the weekly chart, since last 3-4 weeks, there is some supply pressure, but still overall stock is holding the ground above 50-day moving average. So I think till stock is holding above 575, a trend is likely to be there on a bullish side only. So around 575, one can look to buy again this stock, as overall structure is bullish. And on the higher side, once stock crosses above 640, 650 mark, then possibly we can see target towards 750 to 800 also on a positional basis. So buy on dips is the strategy. 575 is the right level to again re-enter in the decline. keep your stop loss at around 550.
All right, 550 is the kind of stop loss that one should look at on a Sula. But let's quickly get in some viewer queries then. Nisha wants to know your thoughts on an LIC India. Of course, LIC has had a good recovery, but over the last 5 sessions or thereabouts, it has seen a bit of a cool off, right? Would you advise, people to look at this stock on dips, because it has had a fairly good recovery? And of course, recently it also toppled a market cap milestone, right? So here on LIC, overbought, or do you think it's time to get into it?
So stock was overbought in month of January, and some profit taking is happening now. I think this is again, opportunity. Stock is giving you again opportunity to buy the stock in this cooling off behavior of the stock. On the downside, 1,970 is the important level. Till this levels are intact, we hope that this stock will again regain to all-time high trajectory, and going forward we can see target towards 1,200 to 1,250 also. But yes, one should keep in mind it has to be keep as a positional trade or investment. Don't look at to buy this stock for trading perspective. If you can hold the stock for next 6 month kind of time frame, then again, in the decline, you can buy and accumulate. Keep your stop loss at around 970. On the higher side, 1,200 to 1,250 is the near-term to short-term target for the stock.
All right, that's those are the levels to watch out for. Hope that answers your query, Nisha. But let's take up the other one coming in from Anukalp, and wants to know your thoughts on an LNT. Now, LNT has been in a consolidation phase, right? But for somebody who wants to trade into this counter, would you advise them against it and perhaps only look at it as an investment play now?
I think very substantial corrective move we have seen in last couple of weeks for the stock. Almost stock corrected from the level of 3,700 to 3,200. Now stock is trying to get some support buying action on the lower side. So at this moment, 3,200, 3,250 are the important and critical support area for the stock. Though overall long-term structure for stock is on the bullish side across all time frame. Long-term, we are bullish, and we believe that once the stock again crosses above 3,300, then possibly this stock may continue for the more upside. On the higher side, 3,500 is the immediate level. Once the stock crosses above 3,500, then yes, possibly we can see again another all-time high trajectory for the stock. So yes, one can accumulate the stock, use this decline as a buying opportunity. It's a good quality long-term portfolio stock on a fundamental basis also. So I think it's a opportunity to buy and accumulate. Keep your stop loss around 3,200, and on the higher side, again, we expect this rally can extend beyond 3,700 also on a positional basis.
All right, that's the view on LNT. But very quickly, the next query is coming in from Anand Upadhyay. Wants to know your thoughts on an IFCI, I beg your pardon. IFCI staged a good recovery on Friday, 4% kind of gains. Here on the charts, do you think this recovery has more legs, or do you think that was just a one-off move on Friday?
So very strong rally in month of January. Some cooling off is happening in this stock also. But looking at the long-term structure, we believe that till stock is holding above 50 level, I think again stock may attract some buying action. Though there was some downtick in last couple of trading sessions. So, but keep your trailing stop loss at 50 if you are holding the position. If it's hold those level, yes, some pullback action will be there in the stock. 60 and 64 is the immediate hurdle. If stocks manages to take out above 64, then possible target on the high side we can see towards 75 also. So keep stop loss at around 50 to hold your long positions.
All right, 50 is the stop loss that you should keep. Hope that answers your query. But the next and last query is on Dr. Reddy, is coming in from Vinay Kumar. Of course, this stock will be in focus given the fact that reports suggest that it is in race to acquire Novartis. Novartis's India arm. Stock has been in a good up move. Earnings are pretty good. On Dr. Reddy's, what are the levels you'll be watching out for there?
So we have seen a lot of traction in most of the pharma stocks. Dr. Reddy's are also one of the stock where we are seeing sustained buying is taking place since last 4-week series of higher high-low formation on a weekly chart that clearly shows that there is a sustained buying action is taking place. Looking at the short to medium term structure, stock is in bullish trajectory. 6200 is the major support area for near term trend till 6200 is intact. I think trend is likely to be there on a bullish side. Stock is moving in up sloping channel on a daily chart. So we believe that this momentum can extend further. 6450 to 6600 could be the next target on a positional basis. So yes, hold your long position, or if you're buying, keep your stop loss at 6200. Upside target is 6400 to 6450 to 6600.
All right, that's the view on Dr. Reddy's. Hope that answers your query. But with that, we've come to the end of this query segment. But Rajesh, before I let you go, what are you spotting on the charts for our viewers this morning?
So I think one can look to buy BEL, Bharat Electronics, from this defense theme. Very strong buying action in last week. And looking at the overall structure, we believe that BEL can continue. 198 to 205 is the positional target we are expecting. Keep your stop loss at around 182. Second stock that we like is from the IT space, that is Wipro. We believe that the outperformance is likely to continue from the Wipro. Very strong breakout on a near-term chart. Looking at the breakout, we believe that 565 to 575 could be the near-term target for stock. Keep your stop loss at 530 to buy this stock. And the third stock is from banking space, that is Federal Bank. Again, stock managed to give a breakout. Very strong buying action is taking place since last couple of days. Stock managed to give breakout of its multiple supply zone on a daily chart. So we believe that till stock is holding above 159, possible target we can see towards 175 to 180 on the higher side.
All right, those were the recommendations coming in from Rajesh this morning. With that, Rajesh, as usual, thanks a lot for taking out time, addressing all the queries, and of course helping us navigate the charts as well. Well, with that, we've come to the end of this edition of Morning Trade. But of course, thanks a lot from me and the entire team for tuning in. You guys stay tuned, because coming up next is Opening Bell.